You can join the stocks community for $25 at stockscommunity.com. Let's take a look at some investing ideas for Monday right now.
If you're worried or even excited what your favorite tech stocks are going to do the coming week, you found the right video. We're going to run you through Tesla, Nvidia, AMD, WBD, Palantir, SoFi, GSOL, interesting one. Bit of Bitcoin stocks, silver stocks, gold stocks, and of course all the research here was done by little Alberta, who has a little bit of an eye infection, unfortunately, but she'll be all right. So let's jump straight into it. The tool I'm using is, of course, TradeVision.io, which is the tool that we build. So let's run through them in that order, and I've got a little watch list here so you can follow along. There it is. Well, actually, we're going to kick off with Tesla because I'll have it on the screen. And Tesla just had the most beautiful 2 days for a very, very long time. What are you seeing on the chart here? Well, the first thing, of course, if you follow me for a little while, if you're new to it, I'll break it down for you. We have one of our textbook heartbeat patterns here. Do you notice that one, right? You notice that one? There's an even bigger one if you connect these two here as well. But therefore, it's time to draw some lines. And it sounds silly. I used to think it's silly, but it's the one thing that makes me quite a lot of money. So that would be one way of drawing in that trend line. Why did my line just disappear? There we go. And here is another one. And we're just sort of roughly connecting. We can go back even further. Roughly connecting the highs and the lows here, right? That's all we're doing. We're connecting highs and lows. It's that simple. Trading and investing is actually very, very simple. We follow the money. Once you follow the money, well, you kind of have a pretty good idea of what's about to happen. And then on top of that, we have this high here and this high here. And you could, again, put in a little bit of a line here just to illustrate those. And what do you see? Well, we've taken out the previous high. We've taken out that high. We've taken out that high. And even better, this is really why this is such a sweet setup. That yellow line there is the 50-day moving average line. We're above it, right? It's curving up. We're above it. And even better, and I know there's a lot of information on the screen, but that's what makes TradeVision so freaking amazing, is you see the red line? You see that red line there? It says Res 370. At $370, the institutions were starting to sell. Guess what? We bought more than the institutions sold. So we've also taken out that resistance line, the buggers, the market makers. And therefore, this is a big, beautiful, shiny, self-driving breakout with robots and everything else, popcorn included. So yeah, this is a very sweet setup. Should you therefore run out and buy it? Well, I can't tell you that. Why not? Because I don't give you financial information advice. I just tell you the rules, the way I look at the chart. And being able to spot stuff like that is beautiful. And by the way, you think, well, it's a bit late now because at the end of the day. Well, yes and no. But if you knew these rules before watching this, you could have set up an entry point here. And you would have bought down there at 370. So you'd be up $25 just on that entry right now. Now, I think it's important that we share that knowledge, that skill set of how to spot these entries with retail investors, you and me, because I think we deserve to have the same info edge. Don't you agree? Well, if you do agree, by the way, put an agree in the chat or an A in the chat, and that way I know that you actually want more of this information, and Alberto and I'll be able to put up more of these kind of videos. So in the same vein, I'm going to do a whole session of just teaching, no fluff, nothing else, just teaching. And I'm going to teach you these rules, and I'm going to charge you nothing for it. Why not? Because it's so much fun when people learn this and you see the penny drop and they go, OMG. And I get these messages every day from students of mine, but I'm going to do a public session. It'll be on Tuesday at 9 p.m. Eastern time. And that means most of the wage slaves in the audience will also be able to attend. If that offends you, by the way, that's a whole nother problem. We need to do a mindset session on that one. I used to be a wage slave. I did banking and corporate law, and I was then working for myself, which is also that. But this is literally the rules that the most successful in the traders have been using, literally for decades. And I use them every week. And We're doing pretty nicely with it. And it's way simpler than you think. And you can actually learn that foundation in about an hour and a bit. So come and join me at felixfrenzel.com/training. There's a link down below as well. I'll put it on the screen for you as well. And it's our mission to make more people financially free so more people can hang out with their kittens and their golden retrievers during the day and just enjoy life. So felixfrenzel.com/training. Try and sign up for that masterclass. And by the way, do that sign up like now, like today, not tomorrow or next week or someday, because you know what someday means? It means never. Now, having said that, let me walk you through the next stocks here after Tesla looks so good. Let me give you one other golden nugget here, and this is a trade vision nugget. We have access to dark pool data. So I just went back in the top here, and I was like, well, we already broke out on Friday. What happened on Thursday? Oh, on Thursday, institutions were bullish. Interesting. So if you, again, seen that, Thursday institutions were bullish. We've broken out. Why not set up a buy order like right at the open of the market the next day, which is really when institutional money started pouring in. You can see that from the volume down here. And you would have seen that. And then what did they do on Friday? Let's have a look. Slightly bullish, you see? They've already placed all their positions just a little earlier, right? So all we got to do is follow the money flows, and trade vision is a great way of actually doing that. Now, let's run through the rest here in that order, more or less. Let's look at NVIDIA. And I am bullish semiconductors, by the way. My name is Felix, and I am bullish semiconductors. And NVIDIA isn't at the top of that list for some reason, because it's already run up a lot. And at the moment, it is in a phase which I call exhaustion. So when you take Winston up a great big mountain, he gets to the top, he just sort of plops out and just lies there with his legs spread out and says, you better have brought some boiled eggs. And it's a bit like that with NVIDIA right now. So it's just going sideways. And you look at the highs here, and that high, and then this high here, and they're kind of just inching downwards a bit. Same with the lows. See, they're inching down a bit. And what does that mean? There isn't a lot of strength there. Like, we're just kind of like, yeah, it's looking all right. It's had a nice, sweet run. We're just kind of like, yeah, neither here nor there. So that's kind of the problem with NVIDIA. And then you can look at, well, what's part of the problem? Let me zoom in a bit for you. Look at that red line again on the screen. Right? This is an indicator you're only going to get in Trade Vision, by the way. Absolutely nowhere else. There's a free trial to that too, so you can test it out. If you hate it, let us know and just cancel it. But I know more than 10,000 of you love it, which is super cool. So that resistance line there sits at 177.50. Write that down on NVIDIA, right? And where did we close? The close was at 177.53. It's almost as if this stuff works, isn't it? Now you can go even deeper and say go on a 15-minute chart and just have a look at yesterday and just see how that red resistance line here pins the stock to it. Because every time you go over it, lots of sales volume kicks in. Every time it goes over it, lots of sales volume kicks in. And we get dragged back to it at the end of the day. Now, we can eventually arm wrestle and win against, institutions. But in that process at the moment, it doesn't really look like a particularly sweet setup. So have a look at AMD in the same vein, because that's the same sort of setup. And it's doing exactly the same thing. And we opened an AMD position at 119 here, and that was a nice little run up, by the way, right? That was a sweet little run up, and it ran up, 40, 50%. And then the question is, well, did you already get stopped out? Most people probably did if they had some decent risk management. If you're still in on this, well, you're probably going to be in a sideways action for some time unless something glorious happens. So I'm not loving this. You could even argue that this is a little bit of a head and shoulders thing, which isn't beautiful because this was your kind of warning sign. So I'm not loving it. There are lots of other semiconductor stocks that actually look quite decent. I've got a whole list here. You want to take a screenshot of my list? Here's 106 semis. Actually, I'll do one better for you. One sec. I'll pull up a heat map. You can take a screenshot of that. And then you can ask an AI to give you the list, and you can dump it in here yourself. Maybe we should include these as standard in Trade Vision. Would that be helpful? So let's make them all the same size. Here, there's 106 semiconductor stocks here in front of you. I think one crypto stock, I think, snuck in there. which of course is entirely possible because I do this myself. But yeah, there's a lot of stuff in here that's actually going up a lot. KOPN, LEAS, look at those ones. Look at the ones that are actually moving. Mu, there's a lot of stuff that's moving. The big boys, they're not moving. So look for the smaller boys. That sounds really bad, doesn't it? That is not. Right, moving swiftly on to Microsoft. No. Okay, enough of those Bill Gates jokes. Palantir. Let's look at Palantir. Palantir had a very good week. Very, very nice week. We really, really moved up here very nicely. Friday, 4.3%. Woohoo, rally. Now, is there any real news reason for that? Well, that's one of the other cool things for Trade Vision. It now gives you news alerts, which is really, really cool. There's also a summary in here, and you can click on that, show more. You can see everything that's going on here. But yeah, it tells you exactly what's going on here, upgrades and so on. And then it also gives you, if you really want to, every item has the sources. So you can click on those. You can also just click on the straight news articles. But what I love is that, so you can filter by impactful articles only. So you can get the dross. What I love about this more than anything is that I can get alerts on just the stocks that I want. So notifications, and I'm getting alerts on, say, my watch list, so the stocks that I'm interested in, right? You could make it your portfolio, anything else like that. So that's very, very, very cool. But okay, enough about how cool Trade Vision is. I'm just excited because we built it, and it's just very, very fun. Palantir did something important, muy importante. It went above the yellow line there, 50-day moving average line. And this whole thing down here, we basically just kept bouncing off it. That's actually a good thing. That's strength. Like, we didn't break down below it. That's very, very useful. And yellow line reminds me I should put on these glasses. It's better for the eyes when you have studio lights on you. And the only thing is that breakout here, these last 3 days, volume was a bit meh, right? So not brilliant. But we did, and Alex Karp will be happy about this, we did beat up the institutions. The institutional resistance is sitting at 165. So that's another big win. So to me, Palantir looks very good. It is going to hit the same resistance it hit up here at 188, 189. So let's just bear that in mind. That's definitely going to be the next test case there. But yeah, it looks beautiful. And the more you listen to Alex with the wonderful hair, the more you want to fall in love with the stock, marry it, and just generally put all your money into it. But that would be a bad idea, which is why we don't do that sort of stuff. So yeah, think about risk management there. Now, Warner Brothers, that's an interesting move, right? You don't see stock charts like that very often. That thing went up on Thursday 28%, on Friday another 16% on monstrous volume. Now, I had no idea why, because it's not really something on my radar normally, Warner Brothers. Really not the sort of thing I want to invest in. But you got all the news in here. Takes off as Paramount, Skydance, Ice takeover, right? So it tells us there's a takeover here. So it's up 28% and so on. It would combine Paramount, CBS, Nickelodeon, MTV, Paramount, blah, 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 blah. And it's an Ellison-backed bid. So that's pretty good, right? That's pretty good. And at the same time, Warner Brothers obviously wants to get a good price for itself, which is why on September 11th, the CEO says the business will meaningfully outperform the forecast. So yeah, good stuff there. And again, you would have gotten an alert for that. I did on my mobile phone, so I'm like, oh, okay, interesting. Now, what's my verdict on that? So this is a stock that it's underperformed for quite a long period of time, right? Pretty long period of time. It's basically just been going flat. Now, the longer you go flat, the bigger the potential breakout. But this is an events-driven and mergers-driven buyout. Not buyout, rally. So the risk is that the deal falls apart. So in reality, there's probably a 50-50 chance. Now, do I think I have better odds than 50-50 with all the other stocks? I do. So for me, these things generally are not on my radar. I used to cover this kind of stuff when I was a banker. We looked a lot at like events-driven stuff. But to me, this doesn't seem like a sweet spot. Like we would look more at like, is there, the two companies or maybe three or subsidiaries are listed somewhere or something. Maybe there's an opportunity somewhere in there, but I don't think there is. I mean, you could get lucky, but lucky is not the way we want to make our money. It's systematic. Now, SoFi. Now, funny thing is, I had a note on my shopping list for SoFi, And my shopping list was this. My rule was this: buy SoFi. If it closes above, wait for it, 26.50. Now it closed at 26.49. So yeah, I'm still not buying it because rules are rule. That's the way it works. But no, essentially what you're looking at now is, you see these highs here? They're slightly higher than that. I actually would kind of like to be above them now. So I'm now actually, no, it did close at 26.50, but it moved slightly lower after hours. So technically, actually, this is probably a buy. Why is it a buy? Because again, look at the pattern here, right? It's that kind of pattern. And when you break out of those highs here, which it has actually done in fairness, it has, then that's a pretty good thing. So yeah, I'm liking SoFi here. I'm liking quite a lot of banks right now, but particularly these kind of banks that are tech leveraged and therefore kind of loathed and hated by the market still. So yeah, I think SoFi looks brilliant here. I'm not telling you to buy it, but to me it looks really, really good here. We would of course like to see it, move a little higher and then see the volume pick up a little bit more down here. That would be a real win, but it still looks pretty good. So I'm liking this one. Now let me walk you through a couple of stocks that we don't normally talk about, because I want to show you a little bit more about how to find opportunities and maybe teach you a thing or two that you didn't already know. This is an interesting one, PASS, that I presently own, and I'm not showing this off to gloat. I didn't actually buy this down here. I bought a stock called MAG. I don't know if that's still listed. I don't think it is. And I got bought by PASS. So there was some weird buyout whereby I got some cash and I got some stock in this new company. But the funny thing is, I should have bought PASS. Let me just do something about this meowing cat. 1 second. Right. Now, what do you think of this stock PASS? Can you identify the pattern and tell us where the next entry point is? I think we still have some studying to do, unless that meant something. What does that mean? Talking about the RSI? All right. Okay, let's not stop being silly. So there is actually, funnily enough, in this silver stock, like many others, and part of the silver story, it's not about just shiny stuff, is you can't really do AI without silver, because it's in every piece of equipment.
Okay, guys, let's take a look at PSIX. This is what it looks like. Let's do a little breakdown here. This is a power stock. I like Felix. I like PASS. Maybe. I don't know that there's a better stock right now than PSIX to buy right now, which is what is important right now. So this just looks good. And in terms of recent news, we can pull that up here. This was August 27th. And this is August 11th. So August 11th is here. Just going to not look into that too much, because it looks like it went down when the news that they got the sort of revolving credit, line of credit. And then here was the Hyundai partnership. So let's jump into a breakdown right now and take a look at this stock. It's the power stock. It's super important. It's PSIX. So let's do a breakdown. Okay. There's one stock that's about to break out. It's PSIX. It's a power stock. Power is very important for data centers. Data centers are essential for AI. This stock in particular provides power systems to allow companies like NVIDIA, which have released their new Blackwell chip, to power that chip. And the stock is set up in such a way that it looks like it's going to break out very soon. It's one of the top 5 stocks in the market right now in terms of breakout potential in the next handful of days. I'm not talking about stocks that have already broken out like Tesla. I'm talking about the stocks that are little known that haven't broken out yet. let's jump in right now to the chart. So this is the chart. This is why this is so appealing. If we look at this chart, the volume is leveling off. Volume does tend to level off before a big move up, so that's not a factor. And the moving averages are converging here. So the slower moving average caught up to the faster moving average. And if you're wondering what this is the 50-day, okay? This is the 5 and the 10-day. Do the exact moving average lengths that you use matter? Does 50-day matter as opposed to a 20-day? Do you have to have both a 5 and a 10-day? No. The bigger point is that when moving averages are all at the same price, that means that the stock is tightening up. We can see that visually looking at the chart. It's definitely tightening up, and it looks like there's a lot of blue sky, which is great for us as investors. We can risk a small amount and make a large amount. That's the technical reason. The technical reason is very important because you can know very little about what a company does and you can still make money in the stock market. That's the wild reality. But let's jump into what this stock does so we can feel a little bit more comfortable buying it. So here's what they do, okay? This is Chat GPT. This isn't Bloomberg. This isn't Twitter. This isn't the Wall Street Journal. It's ChatGPT. It's all of those sources. If you're watching this video, I think you've used ChatGPT before. So look, P6, they do power solutions for data centers and AI. That is a growing sector, okay? They do have strong analyst price targets. That's not that important for us because we know the analysts like to give big price targets for companies that employ them. So let's take a look at what exactly we're going to compare these to. GEV and Powell are the two major tickers that we want to look at. GEV does power generation and turbines, okay? Powell does power control rooms, and this is the one that is very analogous to parts of what PSIX does. So look at GEV first, and it looks relatively similar to PSIX chart-wise. Powell has already gone, okay? So we can't buy this. What this does indicate is that PSIX is likely to follow a similar upward growth trajectory, okay? If I wanted to get into Powell, I would like it to go sideways, just like PSIX is doing right now. That's the opportunity in PSIX. Let's look into a little bit more about what this company does. Here's the connection with AI and NVIDIA, okay? Blackwell. It takes much more power per processor and per rack to power Blackwell. Additionally, there may be upgrades in infrastructure to handle the load reliability. Enter P6. P6 is in the business of industrial and specialty power solutions. They're a Fortune 1000 company, of course. They're an industrial and specialty power solution company. They do power control and switchgear, and they make it possible to regulate power in heavy use scenarios like data centers running AI. If you watch the All In podcast, you might recall Chamath saying he's invested in AI chips, developing new chips to run AI models. To power those chips, you need a power control solution that is, you could say, built for those chips. And I think P6 is filling that role. And if they do fill that role and some big collaboration news comes out, this is going to be a massive opportunity. So let's take a look at some risks. There could be delays. That means if this stock starts to go sideways for too long, or God forbid starts to go down some, we hop out. We don't know exactly when these AI-enabled chips, these new architectures are going to require this power control technology. There are competitors. Schneider Electric has been around for a while. They are the IBM of this category, power. And they do have to continue product development. They need to make sure that they are not only power efficient, but also cost effective. This is not something that we have to worry about too much because we're not engineers. What we have to do is say, hey, here's the chart. There's a lot of institutional interest. If any institutions get spooked by something the CTO says, they're going to start to hop out, and we're going to see that on the chart. We don't have a direct line to the engineering team. What we have is what is actually happening on the chart, and that is actually more accurate a forecast of what is going to happen in the next 2 weeks, the next month, the next 3 months. And that's what we do as stock investors. So that is the ticker. I haven't said the word NVIDIA. There could be an NVIDIA connection. I think that's driving a lot of the demand. And in terms of key levels, this is the key level. $94. If it can hold 94, we've got a breakout level at 96. Okay? That's about as tight risk reward as you can get. $2 to potentially make $25. And that's only to get to this high. We could break all-time highs. Okay? So, that's P6. That's the play. That's the company. And if you want more stock ideas and you want to chat one-on-one, head to stockscommunity.com, join for $25. It is a community with a verified $9 million trader. I hope to see you there. Hit that subscribe button if you haven't already, and I will see you in the next one. So, let's take another look at what Felix has to say here.
But you actually have here a really nice sideways zigzaggedy action. And arguably, that would have been an entry point. Alberto seems to agree with me on that one. So what I'm showing you here is that there were a couple of entry points. There was one here, right, where we broke out of that pattern. And then we topped out here again, went a little bit lower, topped out here again, and then a little bit lower. And then this time actually broke through. So that was entry point number 2. So where is entry point number 3? Is this it? I don't think so. No, I think silver is going to go a lot higher. I think both gold and silver are looking absolutely beautiful. I would personally probably wait for a little bit of a pullback and then buy the pullback as it kind of becomes here, 0.3. And we're going to run through those rules on Tuesday, so join me for that. But yeah, it's looking very nice. And just look at how we're going up, how the volume goes up at the same time. So this is looking very, very good. Very, very happy with our silver selection. And then gold, similarly. So a lot of people are excited about gold prices, right? So gold is, doing its thing. And it's, again, almost as if this stuff matters, right? What's that the point? That is the boom point, the buy point. That was the breakout because gold didn't actually do anything. But at the same time, gold miners were doing a lot. So that's what we're buying. Gold miners, BTG, me and Alberta. So my last buy on BTG here was at 403, which is about here. Is that the cleanest entry? No, it's a little bit more of an advanced one, but it is actually the same ziggity-zaggity thing here. And then you just got to take a line across those tops. And then you have essentially your page marker screenshot. I didn't know that was a thing. So yeah, there you have your entry point sort of there. Or maybe a little bit below that here, which is what I did. So I think gold is going to do tremendously well. But again, it's a little extended right now. So as much as I love to buy gold, I would, again, wait for the pullback a little. I'm not telling you what to do. I'm just saying I would. So, the real sweet entry point was a little lower. It was somewhere down here. I missed it on that particular stock because I was in something else. But yeah, I think gold has got a big, beautiful, shiny future. Central banks buying and all that kind of stuff, and just generally inflation fears and everything else. So it looks pretty good. Now, this other sector that's actually really going bananas is crypto. And crypto is just, well, there are many ways of getting exposure. You can obviously just go and buy some Bitcoin or something and hold it till death do us part and, hold on for dear life. There are also some other companies like these guys here, and this is more like the mining angle to it. Which I quite like. So I always look at, is there a leveraged but lowish risk version with a beautiful chart? And this chart here is about as beautiful as they come. You actually want to marry this chart. And this is just an absolutely really nice sideways zone, right? And then we break out of that. Volume is down here, volume explodes. And that's really what it's all about. And again, if you're new to this, or maybe even just a little unclear, or maybe not 100% confident, join me on Tuesday and I'll walk you through it. And then we get those breakouts. So on the first day down here, this was like a definite buy. And somewhere here, I was late to the party. I didn't see it, but I saw that move. And I was like, okay, we're buying that the next day. And then it does it again, and it does it again, and it does it again, and actually increasing volume. So the trends there, look up after hours. We're gapping up even higher. So this is one of those things that's absolutely beautiful. So is there still time to chase? But it really depends on you and your risk management and your general exposure to, high risk things, which is what this is. But yeah, it's these kind of things that, it's a pretty good 43% in 3 days, right? So that's kind of what we look for. And I'm very happy to buy a lot of stocks that don't really do much. And occasionally we find these and they do a lot. And that's kind of how we make a lot of our money. Another one in this general space is Grayscale Solana. Solana is another cryptocurrency. Again, you could just obviously buy it, but that sounds like a lot of work, so I didn't. But the Grayscale Solana is, it's been a little pummeled. from all-time highs somewhere up there. It is still down 80%. It was down 92% at one point. Buy and hold, they say, which is what would not have been a very good, very, very fun journey. But now what has it done? Well, it's done exactly what we wanted to do, which is it's done this, right? And I'm not one of those crypto nutters. Not that you're nutters. It's just like, I don't really understand what you're talking about half the time. But yeah, this thing here has been very good. Very nice consolidation on monstrous volume. We're rallying up on really big volume too. So this is clearly some institutional money pouring into this. And it looks early. Still to me, looks very, very early. So I'm a big fan of that. And by the way, we've added all the OTC stocks, over-the-counter stocks, all the little stocks to TradeVision Just. So if you were looking this up, GSOL, when I mentioned it a few days ago, one of those, you couldn't look it up. Well, now you can. So yeah, that one's up just 8% there in a day. I can't remember what my entry point was on this, but it looks good. And it's, again, textbook. So what we do is not rocket science. It isn't some sort of crazy guessing game of the market or like reading the tea leaves or something. No, it's looking at the chart. Is it the right pattern? Are we above certain moving average lines? Is volume doing what we want it to be doing? And then, of course, you got to understand risk management, position sizing, all that kind of good stuff, and talk about all of that on Tuesday if you come and join me there. So this looks pretty good to me. It looks very, very good to me. So if you want me to add any other stocks to this list for the coming week, I tend to do these every weekend for myself, but also, of course, for you. More fun that way. Then drop them down below in the comments. And for yourself, just make sure you actually show up for yourself on Tuesday, because that's going to be an educational opportunity that I might not repeat. And you're going to get a lot of knowledge. So come, be prepared, bring a piece of paper or something, take some notes, take some screenshots, and learn and just get better. And it's so fun when you know what you're doing and you're looking at these things and you've got your good risk management set up, and you're just looking at stocks and you're going, this all looks pretty good. I'm pretty happy with everything I've got in here. And you get these big, beautiful, shiny wins. Not promising those, but if you understand this, in my humble opinion, you will very likely do better than you're presently doing. And that's really what this is all about. So I thank you for watching. I thank you for tuning in, and I hope to see you on Tuesday. Take care. Are you worried you're going to get caught out by the market crash that will inevitably come because the market moves in patterns? Well, that's what Hugh just told me to watch out for. And in all seriousness, there is actually a structure to predict the market patterns. It happens with 90% accuracy. And I want to walk you through that.
Okay, folks, let's take a look at UAMY. This is not a gold stock. This is an antimony stock, and it's the only antimony stock that's publicly traded. So as far as recent news, there's nothing that impressive. You can see August 27th was this direct offering, and August 19th, there's a board member that was here. That's the offering, and then September 8th was this sort of mini conference. So look, I think this play is more about the long term. Okay? So let's jump into a quick breakdown and make sure we understand the rare earth connection. China not allowing antimony exports is pretty big, okay, for this company. That was effective in December. They banned exports of antimony to the US. So that is pretty insane in a good way. for buyers of this stock. And antimony is in that rare earth bucket. So, there hasn't been a strategic collaboration that makes UAMY exciting. However, there could be. And I don't think there have been any collaborations to foster U.S. rare earth independence. Besides MP, and if you remember MP, holy moly, that was a move. $400 million investment from the DoD. So that's the potential. It's not small. Not small at all. Okay, let's jump into a quick breakdown and make sure we understand where the buyers are, where the bag holders could be, so we can be safe buying this. Now, it doesn't hurt that the ticker has United States in it as well. United States Antimony Corporation. There's one stock that is the sole publicly traded company that mines antimony, a critical rare earth material used for military applications. There was a recent boom in MP materials, a $400 million investment from the Department of Defense that made MP materials skyrocket. There could be an opportunity for this antimony stock to have a similar massive move to the upside if there is a government collaboration in the works. I don't know exactly when that's going to happen. I do know that now is the time to buy when the chart is positioned in such a way that we have low risk, and this collaboration, should it materialize, is on the horizon. Let's jump into the chart. Let's jump into why this ticker looks so interesting. This is the ticker UAMY, United States Antimony Corporation. Knowing nothing about the stock, nothing about the company, only having this chart, it looks sensational. The earnings move, positive. All-time highs, yes. And the breakout level is extremely close coming into Monday. Of course, there's going to be a lot of eyes on this stock early next week. It is a $5 stock. It's inexpensive, which gets a lot of retail investors excited. Institutions can fuel and capitalize on that excitement as well. The volume is trailing off, drying up. The risk level is clear around 475. And if this stock breaks $5, specifically 513, there's a lot of blue sky to the upside. So let's jump into what this company does and why it's a good company to buy, even if we didn't know anything about the chart. So let's take the opposite view so that we end up with a fundamentally sound investment as well as a technically sound trade. It's a rare earth critical mineral. It's antimony. And they are the sole North American processor of antimony. They operate the only significant antimony smelter in the US. So this company is highly, highly important to the US military. Those earnings were good, 160% year-over-year revenue increase. It's not a big number, it's 17.5 million. They do have 30% profit margin. That's unusual for a $5 stock to have profit at all. This is the most important information. China banned exports of antimony to the US as of last December. Rare earths have been the talk of the country, and UAME stock price has gone up. Couple considerations. It's a $5 stock. It's going to have its highs and lows. They do rely on international suppliers, and I don't know how that has any bearing on their core material, antimony, which is US based. But if we want to take a position in this company and look for a move like MP, which more than doubled on this $400 million investment from the Department of Defense, we do need to keep an eye on exactly why UAME may have international supply chain reliance. Okay. It is still connected to international sources in several ways. Their mines are in the US. Great. Okay. So China sets the price of antimony, and some of the technology and means of creating a usable product are sourced from international vendors. I think this effect is minimal. So if the mines are in the US, if China is unlikely to allow exports, this is the company. This is another piece of information that is going to be important to watch on the horizon as far as UAME becoming reliant on exporting to other countries. Then we have to follow the other countries' antimony deposits as well. But with all of these fundamental details, and I'm going deep into these fundamental details, because so many fundamental investors are focused on buying the exact right company for the exact right technological reasons. This is the huge number, okay? Almost $1 billion to strengthen U.S. rare earths, okay? And UAME has domestic mining, and the smelter is in the U.S. I know it's only a $5 stock, almost. I know it only has $18 million in revenue. That's the opportunity. So if you want to get in on the next MP Materials, which moved like this is it. United States Antimony Corporation, UAMY. I gave you the levels. 513. And you can buy a risking Thursday's high. Some level around 480. Incredibly tight risk reward. Risk 20 cents to make at least $1, maybe more. The stock could go to $10. I'm being extremely conservative, and it could go to $10 or more. If you guys like this analysis, if you want to chat about tickers in a measured, reasonable way, in a Discord with a verified $9 million trader, head over to stockscommunity.com, join for $25. It's a reasonable welcome offer. Hope to see you in there. And hit that subscribe button if you have not subscribed yet on YouTube. Take care. Let's tune into what Corey has to say.
In this video, I'm going to show you a $5 or $6 stock that has ties to and is partnered with NVIDIA, and NVIDIA backs them. And there's so much growth potential for this stock. You don't want to miss out on the opportunity to at least look at this stock and potentially add it to your portfolio.
It's just buffering. Five, 4, 3, 2, 1. I'm going to refresh this page. I don't think there's a better ticker than UAMY, the antimony stock, and PSIX, the power stock that powers AI chips. There are a lot of NVIDIA-backed stocks. However,
In this video, I'm going to show you a $5 or $6 stock that has ties to and is partnered with NVIDIA, and NVIDIA backs them. And there's so much growth potential for this stock. You don't want to miss out on the opportunity to at least look at this stock and potentially add it to your portfolio. So strap in. We're getting ready to dive in. This is something I do consistently. I told you in yesterday's video, I have students that made $60,000, $80,000, $100,000, even $130,000 on Oracle. We printed on Broadcom. We printed on Snowflake. We printed on so many stocks in the past couple of weeks. Even Meta. I have students that made lots of money on Meta. You can see right here. Yesterday, I put out a trade alert on TEM, Tempest AI. You can see the trade alert right there. I have students that made $2,500, students that made $10,000, $20,000. I even had a student that made $25,000 on Tempest overnight. We are printing in the Discord consistently. Before I show you today's pick, a lot of people are asking me to prove it. Here is the profit section, 8,800. This small account made 2,000. We can see Tempest AI right here. This student made a very small amount, 2,000, but on a $1,500 account. This student made $25,000. This student made $5,000. We have another Tempest trade here. A student made $600, smaller account. Another student here made $1,800, and another student here made $11,000. So we are consistently making money in the Discord, trade after trade. This was Tempest AI. We did this last night overnight, and the other day we did Oracle, and right before that we did Snowflake. I have students that have made over $150,000 in a week, and we're consistently doing this right here. The stock in question for today is none other than Navitas, NVTS. I have talked about this stock many times, and with their proprietary GaN, which is gallium nitride, and SiC, silicon carbide, they are set out to change servers and data centers and chipsets forever. They are the future, potentially. Gallium nitride and silicon carbide are set out to solve a problem that AMD and NVIDIA face. And more importantly, NVIDIA with their data centers with cooling and efficiency and voltage control, this is where Navitas is going to likely shine. Now, there's risks with every stock and there's risks with every investment, but let's really talk about the fundamentals of Navitas and what they're actually doing and why this is so important. So what is gallium nitride? Gallium nitride, GaN, is a compound semiconductor material used to create high-performance electronic devices like LED, lasers, and high-power, high-frequency electronics. Its wider band gap compared to silicon makes GaN transistors more efficient, smaller, and faster switching, enabling higher power density and faster charging in devices from smartphones to electric vehicles. So gallium nitride is more efficient. It is much more efficient than silicon, which is why gallium nitride is so powerful for Navitas. It's solving a lot of problems and will solve a lot of problems in the future, most likely, especially with data centers, servers, and chips all over the world, including electric vehicles. So Navitas is not just singled out to NVIDIA. This could be smartphones, smartphone chargers, electric vehicles. The moment, if it ever happens, where maybe potentially Tesla might partner with Navitas or different electric vehicle brands, smartphones, all around the world, technology is so broad and so open. The sky is the limit for Navitas with their technology. And so what is SiC? Silicon carbide. Silicon carbide, SiC, or carborundum, is a synthetic, very hard ceramic compound of silicon and carbon. It is known for its exceptional hardness and wear resistance, high thermal conductivity, and semiconductor properties. SiC is used in applications ranging from abrasives and cutting tools to high-performance brake discs and advanced vehicle armor. In electronics, its wide band gap makes it powerful for semiconductors for high-power applications like electric vehicle components and renewable energy systems. Silicon carbide is one of the hardest known materials, exceeding sapphire and tungsten carbide, and its extreme resistance to corrosion and erosion making it ideal for harsh environments. Efficiently conducts heat, which is crucial for high power electronics, and as a semiconductor has a wide band gap that allows for more efficient and powerful operation than traditional silicon, and it's lightweight despite its strength. It is a low density material. So you can see why Navitas has such potential going forward for the future. They could be in smartphones, charging devices, electronics, all through your computer at some point in the near future. So they could potentially expand into EV and electronics and server data, spanning multiple sectors. Navitas has so much potential, and at the current price, it is very appealing to add to your portfolio potentially. Looking at Navitas, I can tell you that right now it is at a very attractive price, around $6. I called it in my most recent video yesterday and last week. In the mid to high fives, I told you guys if it got in the mid fives, it would be a buying opportunity. It's already broke structure previously of $6.08 as it's pushing $6.10 all day today and holding strong. And my AVP, which is a strategy I teach in Discord, which is very powerful and better than any other strategy, in my opinion. I've spent years dedicated to making it better and designing it off of hedge fund data and dark pool data, as well as different strategies all combined in one. My DFib, my D stochastics, RSI, as well as my AVP, which I teach in Discord, is very powerful. It's part of the reason why we're printing so much. You can see all those profits on the screen that we printed on TEM yesterday. $25,000 for some students. Some students made even more than that. I made a lot of money on TEM, and we also made a lot of money on Snowflake and Oracle and Broadcom and Meta and XYZ all in the last couple of weeks. And we've done this utilizing these strategies. Like I said, if you want to make the profits like you are seeing on the screen and like I've talked about and want to be part of Discord, the link to get started is below, and I look forward to helping you achieve your goals. And we can see Navitas is at the top of my AVP, which is between $4.40, $4 range up until around $5.50. And we're right around the top of that AVP. And I'm going to be moving my AVP up even further between $5 and now $6.50. So we're going to have a new AVP soon as the strength of Navitas continues. This is a buying opportunity. I've added Navitas to my portfolio again, more position sizing, more dollar cost averaging. And I believe that this is a great company based on everything: fundamentals, the technicals, their financials, what the company's doing with gallium nitride, and of course silicon carbide, or the fact that NVIDIA's partnered / backed them most recently. So this is a really strong stock in my opinion. There are risks, so I would definitely look to potentially add to your portfolio, dollar cost average, but follow the rules and be safe for your portfolio. This is something that you don't want to be looking at a few years down the line and potentially say, hey, I could have added this to my portfolio, but you want to be safe and you want to make sure that you're not adding too much versus your portfolio size. And when we look at their market cap of 1.29 billion, and then we look at their financials, 1.29 billion, they have a price to sales that is a little bit on the higher side, and their EBITDA is not that good. Their balance sheet, however, is good because they have 153 million in cash. It's a negative net debt. Anytime you have a negative net number, that means it doesn't exist. So they have cash, and their total equity, because their liabilities are covered by assets, they have equity of 388 million, and they're sitting on cash, so essentially $500 million in assets and equity, which is really good. Cash flow is still in the negative, but we can see they've turned everything around this most recent quarter, from cash from operation and financing activities, both looking much better, specifically financing activities. They are definitely making the right steps going forward. They have a 1-year price target of 674, which the stock is still below that right now, but they've had recent upgrades. They beat 3 out of 4 earnings, and the most recent earnings wasn't even that much of a miss. It was very small, fractions of percent on their actual revenue, and their EPS was 1.5%. So the next earnings is coming up November 5th, and you'd want to get in before then because stocks run prior to earnings. So just between now and earnings, you could potentially make some decent money on the stock just doing that. But this, like I said, is a long-term hold. If you are struggling to understand what I'm talking about in this market or the things that I'm teaching on YouTube, and maybe you want to learn, but you don't know where to begin. Maybe you want to retire. You don't know where to begin. You're losing. You get into stocks and you're saying, hey, every time I get in, it tanks, it goes down. Every time I sell, the stock runs after I sell it. You are not alone, fam. This is psychology, and the market is designed to take advantage of you. If you want to make the profits like you're seeing on the screen, and you want to crush like we did on Tempest AI, $25,000, $95,000 on Oracle, $130,000 on Oracle, $50,000 on Broadcom, $50,000 on Snowflake, $60,000 plus on Meta. If you want to make these trades and you want to learn how to do this, I would love to help you grow your portfolio. I live the life that I've always dreamt of having and didn't think was possible. And I've able to come from bankruptcy all the way to where I am now with options and trading. And my system is doing this for many, many students in my Discord. Pretty much everybody in Discord that's applying themselves is making money. They're all doing it, and you can do it too. The link to get started is below. Remember, what you put off today for tomorrow, someone else put off yesterday for today. Never put anything off or waste time. Let's crush it right now. Let's take advantage of time and let's start making money and growing your account the right way. But don't take my word for it. Let's take a listen to what my student Josh had to say, who converted his portfolio from $300,000 to $800,000 and was able to almost reach $1 million. And he's about to break $1 million now. And he's only been in my Discord a year. That's a 300% return. He went 300 to 800, 5 months. And now he's 800 to almost $1 million in a few more months down the road. Let's take a listen to what Josh had to say. Stood out to you the most when you originally signed up for the Discord and the coaching really gave you the incentive to want to join? And do you still feel the same way now? And what would your message be to others that are, in the same situation?
You were more focused on like the actual strategy of things as opposed to, pushing a particular stock or trying to like almost trick people into like how they can get rich. I'm also a masterclass student as well. And that's where I really took things to the next level. For anyone who's thinking about joining, is anyone can do this. It's just really like putting in the work and the effort to meet Corey halfway, but he will definitely get you there. I started with about $300,000 portfolio. Initially saw about between 60 and 70,000 within my first 6 weeks, which I was very excited about. So now I'm really, really excited to share that I've grown that $300,000 portfolio to well over 500,000. I'm definitely reaping the rewards now. Don't wait. I honestly can't thank Corey enough.
So you heard what my student Josh had to say. If you want this to be your success story, take action now. Don't waste any more time. Let me help you achieve your financial goals and achieve the financial success that you want and you ultimately deserve. I look forward to seeing you in the Discord real soon and on the next video or upload. Take care of yourselves. One love, fam.
It is similar to Open Door. It's OPAD, okay? And my goodness, it looks like it has a clear level to buy over. Anything could happen with Open Door. If we look in Open Door right now, came down a lot yesterday, but it's still up a lot. It's still higher than this high on Wednesday after hours, so it could break 10 again. But even if it doesn't, this is where the money might flow, so we do want to be cognizant of that. So let's do a quick breakdown on OfferPad, which is this company, OPAD, and make sure we give some ideas that are also backed on what the company does compared to Open Door. They are similar, they're not exactly the same. Okay? So let's go. In just a second. 5, 4, 3, 2, 1. There is a real estate technology company that is not Open Door, that is publicly traded and has a lot of buying activity. I can't find a better follow-up ticker than OPAD, OfferPad. Open Door could go up higher from here. It's been on an incredible run this past week. There is a sympathy ticker, and traditionally what happens is there's a lot of frenzied buying activity on the main ticker, and when that ticker starts to come down, like Open Door did on Friday, that money has to flow into another investing opportunity. I want to tell you that opportunity now before it happens. So let's jump into OfferPad and let's look at what the company is doing technically. It's gotten very compressed, and it actually undercut and came back in the last 3 days. Did pull back with Opendoor slightly on Friday, but if it can hold this level of just about 450 and break that whole $5 level, there are serious blue skies all the way up to, you could say, the 8s, but you don't want to pick a level on a company that's been going down so much. It is what it is. This is a frenzied buying season, the last week on real estate companies. And I'm not talking about Zillow here, I'm talking about the future of real estate. And Opendoor has incredible volume, despite it also having a profile of downward stock price movement. OPAD's volume looks even more unbelievable. So that is the technical reason to buy this stock. Those are the levels. And let's talk about how this company makes money and what they even do. They charge a service fee to sellers who accept cash offers. Okay? They also offer mortgage, title insurance, brokerage services. So they are in a similar breath to Rocket Mortgage, Zillow. I will say that they are not as well known than Opendoor. They're certainly not as well known as Zillow. However, that doesn't mean that they don't have venture capital investors that are still legitimate. Even though Opendoor gets talked a lot because Khosla Ventures is well known, SoftBank is extremely well known, and General Atlantic is well known, OfferPad still has legitimate investors. LL Funds is in its Series C. They do have debt from Citi, which is a Tier 1 investment bank. And they could be the next Zillow in the same breath as Opendoor. I don't know which one it's going to be. They're both very similar. They offer a service for people to sell their homes quickly and conveniently, like every real estate technology service says they do. But the point is, these guys, 75 and Sunny, First American Financial Corporation, through its venture capital arm, and this SPAC that merged with OfferPad, are on the cap table, okay? So this is a legitimate company, even though it doesn't have the same euphoria and chatter as Opendoor, particularly because Opendoor has Keith Raboy, who is well known, and there was the news on Opendoor on that CEO change. Okay? This is the former CEO that led to that frenzy. You could argue that that frenzied buying activity is unwarranted. That's not really what the point of us investing as medium-term stock investors is. We can see that OfferPad went up a lot on that frenzied buying activity, just like Opendoor did. And for that reason, they're likely to follow Opendoor, or, which is why we're interested in it, take the money that was in Opendoor and go up. As simple as we can say. We want the stock that's going to go up next, okay? They do have this free moving benefit to customers, okay? It's not a huge difference from Opendoor. They are integrated with Realtor.com. They do have a strategic partnership with Auction.com. They are making moves that do look legitimate, which is important for a low price stock, okay? And if we were venture investors, we would look deep into these competitors and make sure we understand that this is a place we can put our money for the next year, 2, 5, 10 years. Because we are not venture investors, we're retail investors, we're acting like minuscule hedge funds. We're trying to make sure we know what they do broadly and why we want to put our money in a just about $5 stock. So I gave you the price levels. I gave you a little bit of information about why OPAD is a good buy. It certainly looks interesting. It's one of the most interesting tickers right now, besides UAMY, that antimony company that is the only antimony smelter in the US, besides PSIX, which is poised to be the power control backbone for AI chips. OfferPad could be the next real estate juggernaut in the same breath as Zillow. But we are not venture investors. We don't need it to become that. We need to be ready to be investors when this euphoria moves from Opendoor to OPAD, and this could happen in the next few days. So, if you want to chat about stocks, head over to stockscommunity.com. It's an affordable $25 fee for 7 days. Chat with me, chat with a verified $9 million trader. If you think that's worth it, try it out. And if you are not subscribed on YouTube, go ahead and hit that subscribe button. It helps me put out stock ideas that are timely. I will see you in the next one. And if you are sticking around for this live, thanks for sticking around. I will be back. Ask those comments in the chat during the live. Drop comments in the chat of videos. Comment section is what it would be called. Chat in the Discord at stockscommunity.com. And have an awesome Saturday.